Thank you for joining me in my market report. My name is Mike, and this market report is on mortgage rates. We like to get into what drives mortgage rates on a daily basis, whether it's something from the economic calendar, whether it's something in the headline news or geopolitical, or something different like the sentiment that just changed. And investors now have good news is now bad news. So that may, on the surface, look irrational or illogical, but there are sometimes reasons behind it, and we like to get that information out to you. So most likely you're watching the video if you're looking to refinance or purchase a property and trying to watch rates. So this would be a great video for that. This will be information to help you, guide you, and let you know where rates are moving towards. We kind of like to let you give you the information out there so when you're in that process, it gives you hopefully an informed decision to make, whether if you want to lock or proceed or to continue kind of floating your rate, so to speak. Hopefully, if you guys got questions, please feel free to ask, whether it's about mortgage rates or a little bit about the different loan programs out there. A little bit about myself is I am a loan officer, so I can answer those questions for you. I work with a national lender, so we do loans in all 50 states. We'd love to earn your business, so please reach out if you guys are looking to refinance or purchase, see how we can help you guys out. And or even if you guys just got questions, again, about the loan programs or different things of that nature. So we're here to assist you guys. So without further ado, we'll just jump right into it. We'll start off with the economic calendar. There's only items here are from the market PMI, IHS market PMI, and they have this manufacturing and the services industry so for the month of October. So anything above 50 on this index considers expansion or confidence. So we'll start off with the manufacturing. So in September we had a 60.7. Forecast is supposed to be a slight dip down to 60.3, and it dropped a little bit further down to 59.2. So still good numbers, but it did drop, so it's something we'll definitely keep our eyes on. The services sector was at 54.9 back in September. Forecast was supposed to be uptick to 55.1, and it jumped up a little bit further to 58.2. So we're starting to see services industry do a little bit better in the month of October, which is obviously good news overall. Stocks they were up earlier in the day. They've been reaching new highs. They've been taking a lot of their cues off the Q3 earnings reports. However, we did have a couple of things that happened today. We had Evergrande. It was reports out of China that Evergrande made their late payment on that deal. It was like $83.5 million of their bond to the bondholders that they had owned. We're still seeing a lot of negotiations going on with Congress in terms of these spending bills that are going on there. So looking at different ways of trying to get that through. We also got a big one today. Actually, was the Fed Chairman Jerome Powell, who made his speech today in front of about 2 weeks. We'll have the FOMC meeting heading into next month. They'll be having their meeting, and basically it did move the markets a bit. We got a little bit of a jolt, including here in the mortgage-backed securities, a little bit of a jolt there. Basically, he did say that they're on pace to go ahead and taper this year. So I don't know if that will be meaning they're going to start immediately in November, or if that means they're going to start in December, announce it, and then start in December. But we'll probably find that out once he gives that announcement and after the two-day meeting and FOMC meeting in November here. So that's about 2 weeks coming up here. He says obviously it's too soon to raise rates, even though and he feels that inflation will be going well into next year. So of course, one of the things that they do fight inflation is to raise rates. So those are something that will do. But the tapering is going to reduce the liquidity in the markets because right now they feel there's too much liquidity in the markets, and that's why the stock market and everything else is just going off the records right now on that. So without further ado, why don't we jump right here in the mortgage-backed securities, see what mortgage rates are doing, get you a little bit bigger picture. We were up a little bit higher. A lot of lenders came out with pricing while it was up a little bit higher. Right now we're down about 9 basis points. A lot of that had to do with, again, with Jerome Powell's comment about tapering. But right now we're kind of holding about up 9 basis points. So pricing will be a little bit better. However, we did have a couple price changes yesterday. We ended up closing down 36 basis points. So a couple of us, we did see maybe 1 or 2 price changes for the worse. So we're not to levels we were early in the week, but we're not at the worst levels where we closed out at yesterday. So we should be a little bit better than where we closed yesterday in that level there. Here's how it kind of looked earlier today. See the different spikes, how after Jerome Powell, also we saw a boom, drop down here, then we kind of worked our way back. It's kind of working its way back up, and now we're kind of down a little bit again. So, again, potential for a very volatile day ahead of a weekend, and we'll have to kind of wait and see. Stocks, again, did pull back a little bit on that too, so they too took a little bit of a hit in those terms as well. So Treasuries is helping us out, as you can see here. It was touching up way up here, like even I think it touched around one, yeah, at a high at 1.7. So we even touched off at 170 yesterday. Today we're down to about just under 1.64. So that's helping us out. That will put less pressure on mortgage-backed securities and help us hopefully get a little bit of a rebound. So we'll keep our fingers crossed to see if we can keep this one coming down. Hopefully we can come down a few more of these technical levels here. However, we'll just have to keep our fingers crossed in the process. So, in the meanwhile, so without just check into what's going on with the national average for mortgage rates. The 15-year is now at 2.6, and 30-year here is showing at 3.23 right now at the national average. So they did worsen this week. We have been, as you know, we've been kind of spiking a little bit in terms of the mortgage rates over the last couple of weeks from being over here end of September and dropping all the way down to here. That's quite a few points drop right there. So if you look at it, being from way up here about the 103.66 all the way down here to about the 102.22, what that translates, it's almost 1.5 points that we went through in terms of pricing. So that no point loan back here now is about 1.5 points for it. So hopefully that puts that into perspective of how much of a drop we had or worsening we had in pricing over the last couple of weeks here. All right, folks, again, if you guys got any questions so we can help you guys out with anything, please feel free to ask or reach out. If you guys like these videos, please help us out. Follow us. Please smash that like button. You guys will greatly appreciate it. And we'll look forward to see you guys on Monday. Thanks so much for watching. Have a great weekend, and we'll see you then. Bye-bye.